Hello all, welcome to Sand Compounding. This is Sandeep, Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10-12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great longevity, great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. Continuing my session of 20 for 2030, which are the businesses for the next decade. The next in the list is Indian financing firm called Bajaj Finance. It was a very small company 10 years back or 11 years back, and it has gone ahead and become a big financial behemoth. And Bajaj Finance has become a super large company that in the finance world, it's not even a bank, and there are hardly 3 to 4 banks which has a market capitalization bigger than Bajaj Finance in India. It's similar to what Synchrony does in US. They were primarily into the consumer lending business, but they expanded the horizons into a varied gamut of products in terms of lending. And its sister firm called Bajaj Finance is the insurance arm of Bajaj Finance. It's a holding company. It has many insurance, both general and life insurance schemes, and it's one of the market leader both in non-banking consumer lending as well as in insurance sector, private insurance sector. Now, Bajaj Finance is backed by obviously the Bajaj Group, which has a strong heritage and foothold in Indian markets. That goes a long way, and they have rightly proved that by bringing these two firms into super large companies with huge market share. Even today, with all these growth and strategy, they are still, they have minuscule of the market share in terms of consumer and home finance lending. They are also ventured recently into home financing, and they still have might be like 2-3% of market share. As we all know, in India, 60-70% of the financing is in terms of lending and as well as deposits and everything is ruled by the state-owned banks, very similar to Chinese state, and private sector has just a very minuscule percentage. I mean, the private banks might be having 30-35% market share, and the non-banking finance put all together might be around 4-5% market share. Now, there was a recent credit crunch and bad loan issue that happened in India because of a lot of credit defaults that happened happened both from public sector banks there were and private sector banks, as well as a lot of non-banking finance companies, the so-called in Indian terms. They have defaulted in terms of their payments to the customers and to the funds, and because of this the credit crunch has been created due to the unwillingness of these companies to lend, and Bajaj Finance has come unscathed through this whole situation, and they still remain undisputed leader in the lending space. Now Bajaj Finance has still a long runway and a huge potential because of this crisis. It's a great opportunity because it's a market leader, and it has great opportunity to continue its growth, maybe moderated way. Let's go ahead and analyze why Bajaj Finance is part of my 20 for 2030 list. Now, more details about Bajaj Finance in the presentation. India's most famous and largest consumer lender in the past decade, which is Bajaj Finance, has created immense wealth for numerous shareholders, that includes me, and still kicking with their growth at rapid clip. Owned by the much revered family-linked management in India called Bajaj Group, Sanjeev Bajaj and Rajiv Jain has made Bajaj Finance as the financial powerhouse what they are today, straddling multiple business segment under their belts. Now the company was a pioneer. I would call it the first fintech in India to take advantage of the digital, the beginning of digital in India, and they used methodologies and customer data for risk management, and created an ecosystem of prudent and quick lending on click of a button. So especially in India during the last decade, it was really difficult for somebody to get avail loan, and Bajaj Finance created the complete digital ecosystem with availing loan, instant or loan origination, and many other things, and leveraging the the customer data, cross selling, and many other things. They could become the powerhouse, financial powerhouse, what they became over a decade's time. There is no there was and there is no still second competitor for Bajaj Finance even today in the non-banking segment. And it is even bigger than most of the private banks and public banks in India. There are only a couple of private banks which are bigger than Bajaj Finance probably, and the management has over and again demonstrated its execution skills. Now there is one point to note: there is a toughest credit crunch going on in 2019, 2018, 2019 period in India, and even amidst all that challenging times, Bajaj Finance is still able to grow the balance sheet, may at the same time maintaining the asset quality. Key business verticals. What started as an auto loans are consumer auto lending for buying automobiles, and under the name Bajaj Auto Finance, which was renamed as Bajaj Finance in 2007. So that is the genesis or birth of Bajaj Finance in 2007, and the whole gamut of consumer lending products were brought under their armor. Now they run around 15 business segments. That includes SME, which is the nothing but similar to the small and medium business SMB merchants in US, home loans, personal loans, loan against shares, auto loans, business loans, travel loans, rural B2B, which is business loans again, and B2C rural loans. So etc etc, there is a whole suite of products. I put a slide that indicates all their innovative products that Bajaj Finance has created in the last decade. They have a total customer franchise of 38.7 million people, and India's population is roughly 1.3 billion people. Now you can see where the market is headed to, and their existing customers contributed to 70% of the new loans, so the growth prospect is huge. They have a presence across 2000 locations in India. That's a point of sale, and continues to expand their presence. They're deeply focused on growing the book, fee income, and cross sell, but following the prudent risk management. Now their AUM, that is the total assets under management, mix includes consumer, ratio to rural, ratio to SME, ratio to commercial, to mortgage. It's in the corresponding way. It stood at 47 percentage to 10 percentage to 16 percentage to 12 percentage to 15 percentage. Now that's the mix they have as of September 2019. Their card business is also booming, with around 20 million cards in force. It's called the EMI card, and also co-branded cards they have with RBL, which is another private bank in India. That stands at 15 million in force as of 2019. Now they have suite of products. So you could see that in the blue screen that they have 6 pillars where they have consumer, SME, commercial, rural loans, deposits, partnerships, and services. So that's a whole gamut of products they have. All sort of loans you can see there, where it is consumer loan, secured, unsecured, used car, specialty chemicals lending, corporate finance lending, vendor financing, auto components manufacturer, vendor financing for them, loans against securities, gold loans. So loans to professionals. There are so many loans products they have launched. All are very innovative. And also they have health insurance. So they are sister arm Bajaj Finserv as all of that insurance products, both general as well as life insurance. Now they also have a separate subsidiary, Bajaj Housing Finance, which has the housing arm, which finances all the provides all the home loans, and loans against properties and everything related to housing. That is growing at a scorching pace again. Now you could see that the black screen there, the total assets under management, and the composition of how much percentage of the AUM these consumer and other loans are catering to. So they have mortgages, which is 30 percentage of composition of 30 percentage, and it's growing at a good number, 43 percentage. And they have consumer, B2B, B2C, including auto and rural, everything put together remains the remaining 90 percentage of their loans. And they do have SME business loans, which are also which comprise around 20 percentage approximately, including the securities lending. So now they have good growth across the spectrum. On an average is growing at 40 percentage revenue. Now they have credit cards, cards in force, that is growing at 126 percentage, and that is the co-branded cards. And they also have EMI cards, which are growing at 30 percentage. Now, coming to the revenues, profitability, and the total assets under management growth, considering these are financial institutions, so the AUM grew by 38 percentage, which is a significant growth volume year on year to US dollars 19.3 billion. So the total assets under management is 19.3 billion. And they have new loans booked grew by new loans booked grew by 23 percentage year on year, which is not much. And the cost of funds at consolidated level has sequentially improved by 11 basis points to 8.38 percentage. And so their cost of funds is improving due to good asset liability balance, which was the biggest problem and which created the complete turbulence of the financial non-banking financial institutions in India in 2018. And their liquidity position is strong, and incremental borrowing being sourced at lower cost. So their source of funds, it's a good mix. They have deposits in 2019 that stood at $2.5 billion. Strong credit rating by all the rating agencies. They are the best in the breed, and best of the breed, and in terms of the ratings and in lending institutions. Their operating expenses as percentage of net income stood at 36 percentage in FY20. So their operating expenses, they have a good focus on that. And the PAT, that is profit after tax, increased by 54 percentage. So their profits are growing phenomenally well, and is expected to touch around $700 million in FY20. Now they Bajaj Finance, its subsidiary is kicking gears in growth. Housing finance is also growing rapid pace by almost 43 percentage. The average home loan ticket size is around $58,000. That's higher value compared to what other home finance companies in India give, lend for. And they have a very premium segment in terms of housing loan ticket size. Now coming to the balance sheet, capital adequacy, return on equity, and provisional coverage, as well as non-performing assets, putting it all together, which are important for a financial institution and bank. Their liability mix is even yield between deposits, bank loans, NCD, and short-term borrowings. So they are unlike other financial non-banking financial institutions. They have a good mix of liability, which is what helped them to survive through this and come unscathed, out of this whole debacle of what the non-banking financial and credit liquidity crunch that happened in India. Now, leverage ratio stood at 6.6 times in FY20, and total borrowing was around $3.1 billion. So they are borrowing at their total borrowing is at $3.1 billion. Total capital adequacy ratio, what they call as CAR, stood at 19.7 percentage in FY19, which is pretty strong. And so they don't look at near-term fundraising probably. And their total consolidated AUM as of September FY20, September 2019 was around $19.4 billion. Provisional coverage ratio, that is what they provision for, any non-performing assets, or generally they keep up for the covering the losses, which is around 63.9 percentage, pretty healthy. Gross non-performing assets was around 1.44 percentage, and net NPA, non-performing asset, was 0.52%, which is negligible if we really compare to any banks in India, or even other non-banking financial institutions in India. They have maintained excellent asset quality right from the beginning all the way for the last 12 years, 13 years since existence. Now, provisional, the this would be like only a handful of companies, as I said, who's maintaining such asset quality, and they are maintaining a resilient book with operating leverage at 35%, and fee income as a percentage of profit after tax, that is PAT, is at 30%. So one third of their PAT goes in is coming from fee income. Now, return on asset is pretty healthy, 4.7%. That may be the highest in India across the lending institutions, and the return on equity was averaging around at 19% in FY20. So that keeps wavering between 17 to 22% overall, and that indicates a strong return profile on the book. That's one of the key reasons why Bajaj Finance is valued sky high in India. I mean, it is multitude of factors like resiliency, strong management, strong and deep distribution networks, innovative products like EMI cards, and adoption of digital in underwriting, as well as the digital mediums and channels for loan origination. The ease at which consumer can avail loans, it's amazing the way Bajaj Finance turned around this industry. Market capitalization, obviously the valuation is high. It's almost two times than what we can generally see for such kind of firms, and it's standing at around $40 billion as of January 2020. Now it's even two times of the total asset size. Now that is a high valuation, but the market is factoring in a lot of things which are not available or seen as a norm in Indian credit and financial institutions. Now, looking back, when we look back in 2030, in hindsight, why Bajaj Finance will be a great business to hold. It's well capitalized, strong management, strong balance sheet, private sector lender. So these kind of firms which have strong balance sheet, great management, and well capitalized, who also had leapfrog into the digital side in India. These kind of lenders will take away market share from public sector banks. Now, the opportunity for private banks and NBFC, that is a non-banking financial corporations, that's what they call it in India, and they remain buoyant considering the economic revival, gaining of market share from public banks, and crisis situation in non-banking financial companies in India. It's a crisis situation, but a great opportunity for stronger franchisees like Bajaj Finance. The total market is itself growing fast, as Kotak Bank, that is another second largest or third largest private bank in India. Its head Uday Kotak, another phenomenal CEO, who has predicted that in one of the conference that private banks market share will increase to 50% from current 30% over next 4 years. So the total addressable market size itself is shifting towards private banks and non-banking leaders, and so the potential of growth is huge. And if the leaders in these segments would play even grow even more faster, and that's why we can see Bajaj Finance not even slowing down or tempering down on their growth. They are still consistently maintaining 45% growth over the past many years. Now, first Indian fintech, I would say, which adopted digital and technology innovation across the lending value chain, from credit scoring to risk management, underwriting to loan origination to cross sell of products. Management is known for its risk management and efficient credit portfolio analysis carried out at periodic intervals on their loan books through loan review, credit audits, peer review, etc. Now, assets mix targeted to be diversified, that will remain diversified across industries and across retail versus wholesale. Now, the entire workflow from loan origination to disbursement to closure to ARs, everything is automated workflows, digitized across omni-channel streams for consumers, or just with a click or swipe of a screen. They are pampered customers with the ease where in otherwise in India, customers had to take inordinate amount of pain and effort to visit multiple branches, do so many paperwork, and it was a nightmare to get a loan, to avail a loan. Especially there were not many banks that were in the space of consumer lending. Now the EMV card has strong retention franchise as well as network effect, where they're gaining from increased wallet share of customer spending. Now cross selling of products becomes easy because of this EMV card, and and it's cheaper. Acquisition cost for customers are pretty cheap because they are already part of the network, and cross selling becomes easier, and their credit history and a huge amount of data is already available on for existing customers, and that's why we see 70% of revenues from the existing customers. So it's a repeat business that is keeping them, keeping the growth. Now, overall, Bajaj Finance being the leader in the financial sector in India, after the HDFC Bank and the leading private banks in India, and they are already as big as a third largest bank in India, poised to grow at a steady clip for the next decade. Hope this was useful. Thank you.